If you're buying a home in East County, San Diego, you've probably done the math on your mortgage payment. Maybe you've factored in property taxes and HOA, but there are costs that come with homeownership in East County that most buyers don't find out until after they close escrow. Some of them have increased substantially in the last 2 to 3 years, and a few of them are specific to this area in ways that catch people off guard. This video is about those costs, not to scare you out of buying, but to make sure that you go in with eyes wide open and a budget that actually holds. I'm Steven Rotzart, a full-time realtor with Coldwell Banker Realty. Born and raised here, I've been working in East County since 1998. Over 1,000 transactions, ranked #1 agent in La Mesa, and I've had this conversation with buyers hundreds of times. Let's go through it together. California property taxes are capped at 1% of the assessed value under Proposition 13. But that's just the base rate. In most East County cities, your total effective tax rate runs between 1.1 and 1.3%. Once you add Mello-Roos assessment, school bonds, and other district fees, on an $800,000 home, that's $8,800 to $10,400 per year. About $730 to $870 per month on top of your mortgage. And here's the part that matters. If you're buying a newer home or a home in a newer development, you may be in a Mello-Roos district, which adds a community facilities district tax on top of your base rate. These can add another $2,000 to $5,000 per year, depending on the development. Before you write an offer, pull the tax records of these specific parcel. I do this for every buyer I work with. The difference between a Mello-Roos property and a non-Mello-Roos property can be $300 to $400 per month. This is the one that's changed the most in recent years, and it's the one buyers are least prepared for. California insurance market has undergone significant disruption. Several major carriers have reduced or eliminated coverage in higher fire risk areas. In parts of East County, particularly hillside areas and foothill properties near brushland, fall into the elevated risk categories. Well, what does that mean practically? Buyers who purchased in East County 5 years ago and locked in standard homeowners insurance at $1,500, maybe even to $2,000 per year, are now seeing renewal quotes of $4,000, $6,000, even $8,000 or more, or even notices of non-renewal. If a standard market insurance isn't available, you may be placed in the California Fair Plan. That's the state insurers of last resort. The Fair Plan covers the structure, doesn't cover any personal property or liability without a supplemental coverage, which that's now going to add costs and complexity. Before you buy an East County property, especially hillside or rural, get an insurance quote for that specific address before you remove any inspection contingencies. Not after, before. I make this a standard part of my buyer process because I've seen deals where the insurance costs change the entire financial picture of the home. Not every East County home has an HOA, but a significant percentage of condos, townhomes, many newer single-family communities, they do. And HOA fees have increased across the board in recent years. In East County, HOA fees for condos typically run $300 to $600 per month. Some communities with pools, fitness centers, significant common areas, that maintenance can actually run higher. Townhome HOAs generally run $200 to $450. What buyers often underestimate is the HOA reserve. That's a fund situation. An underfunded HOA can issue special assessments, one-time charges to cover deferred maintenance on the building or the complex. And I've seen these run $5,000 to $20,000 per unit. So when you're reviewing the HOA documents during your inspection period, look specifically at the reserve study. The HOA has less than 50% funded. That's a flag worth discussing with your agent. Now, this also doesn't apply to just underfunded HOAs. The other item that can show up with an HOA, not only being underfunded, underinsured. Insurance is going to be an issue in East County, even for homeowners associations. And when they have an underfunded insurance policy, you cannot have certain types of loan programs within that homeowners association. So therefore, we are already seeing condo and townhome projects where prices are falling because certain loan programs are not available to purchase in those developments. So make sure if the HOA is less than 50% funded or has an underinsured policy, that's a flag worth discussing with your agent. Now, here's the cost that doesn't show up on any disclosure: the ongoing maintenance reality of a specific home that you're buying. A standard rule of thumb is to budget 1% to 2% of the home's value per year on maintenance. On an $800,000 home, that's about $8,000 to $16,000 annually, or $670 to $1,330 $30 a month that most buyers don't include in their initial budget. In East County specifically, watch for roof age, condition, HVAC systems in homes without previous upgrades, older cast iron or galvanized plumbing in pre-1980 construction, retaining wall integrity on hillside lots. A home inspection is where this comes into focus. Don't skip it. Don't rush it. And if the inspector flags something significant, don't let the deal momentum push you to pass it on. Buying in East County is still one of the smartest moves that you can make in this market, but going into it informed is what protects your equity and your budget long term. If you'd like to walk through the full cost picture on a specific property that you're considering, that's exactly the kind of conversation I have with my buyers each and every day. So I hope you got some value out of this video. Subscribe if you want honest East County real estate coverage each and every week. I'll see you on the next one.